first before they become an auditor. So they have to know the auditors and accountants. They sit in the same classroom, study the same thing. They qualify the same accountancy profession. They qualify. After qualifying, then they start specializing. One may choose to specialize in auditing, whilst the other may choose to specialize in accounting, that is financial reporting and preparation, bookkeeping and financial reporting, whilst another one decides to specialize in auditing, and within auditing, then they can go to smaller groups. Once you are a renowned and experienced auditor, you may do forensic auditing, or the other way around, or as an auditor, you may do internal audit. Those, they still fall under accountancy as a profession. And the International Federation of Accountants then has a body called International Auditing and Assurance Standards Board. The board is the one that sits. This is a technical body. This is a governance body. Can you see my point? My slides. Can you see my mouse? Are you there? You are too quiet.
Sir.
Yes. So this International Auditing and Accountancy Standards Board and Assurance Standards Board produces documents, rules or standards called International Standards on Auditing. If it was accounting, we would say they produce IFRSs, but let's forget about accounting for now. You see, I'm not using the word accountancy. I'm differentiating accounting, which is financial reporting, and auditing, which is examination and issuing of opinion. So you graduate in accountancy, all of you, then you choose whether you are going to do auditing or accounting. But you decide whether you're going to do auditing or accounting. So sorry, these people are just disturbing me. So today we will be discussing. Today, this next few days, we'll be discussing international standards on auditing, which are the standards that regulate the auditing profession, that are being issued by an International Auditing and Assurance Standards Board, which reports to the International Federation of Accountants. So the International Federation of Accountants, inside it is both all the bodies that regulate the accountancy profession. It is through these standards that we improve, we standardize. The word standards, understand it in the colloquial manner. It is through these standards that one, we standardize the auditing practices. We improve uniformity. The word uniform, the last time I checked, and standardize are kind of the same. We standardize how auditing is going to be conducted. For instance, we will tell you that in the auditing of fixed assets, these are the processes that you need to follow. In the collection of evidence, these are the processes, these are the principles and the processes that you need to follow. Are you there? This is done by this body called the International Auditing and Assurance Standards Board, which issues international standards on auditing. So in Botswana, so these international standards on auditing are international, but sometimes they need to be customized to the relevant They need to be customized. They need to be adapted to Botswana conditions. If you are going to adapt them, to localize them so that they become relevant without infringing the original principle, then local countries then produce their own standards. And most countries have their own standards to comply with the country's regulatory environment, with the laws of the country, without compromising the international standard. So you are not going to issue a local standard, a local rule or regulation on how to audit that contravenes an international standards on audit. You try to be within. So in Botswana, we have Botswana Accountancy Oversight Authority, also called BAWA. You can Google that, which is responsible for issuing adapted standards of international standards on auditing. So, because of our being a young country, you will find that most of the international standards on auditing were adopted as they are. The BAWA will adapt standards or adopt standards. Adapt or adopt. Adapt means localize them. Adopt means take them as they are and make them local standards. So what you will find that in Botswana, we have adopted the international standards on auditing as our local standards, as most of the time as they are. And I happen to sit in the board of BAWA. I happen to be a non-executive board member of BAWA. So I happen to be part of the process that adapts or adopts the standards on both auditing and accounting in the country to be a board member in that institution. So I'm very privileged in knowing what are the processes that are involved. So are you there? I shouldn't lose connection and start talking to myself.
Yes, sir.
Yes. So, like in accounting, we have the generally accepted auditing standards. That, remember, when we're talking of qualifying an audit opinion, I said whether you're in infringement of the generally accepted accounting principles or generally accepted auditing standards. So we also have the generally accepted auditing standards and principles that rhymes in the same direction as the generally accepted accounting standards. We'll speak to them. So the whole conceptual framework that you were learning at ACC 100, conceptual framework of generally accepted accounting principle, there's a conceptual framework for generally accepted auditing standards. Then these principles are the pillar stone that guide how we conduct an audit. The general accepted principles that must underlie any practice of accounting, any practice of auditing in this particular sense, as opposed to a practice of accounting. I'm reminding you that accountancy is the term accountancy. You have a bachelor's degree in what? What is the name of your degree? Bachelor's degree in what?
Accountants.
A bachelor's degree in accountancy. Accountants, the reason why they picked the word accountancy is to include all accounting related subsets. So accountancy means that you have basics in auditing, which falls under accountancy. You have basics in internal audit, which falls under accountancy. You have basics in financial reporting or accounting, which also falls under accountancy. So that's how accountancy means you can do all those. You you have a degree in the basics of all the accountancy related issues. So auditing is inside, accounting is inside. Well, there are two major areas. Is the collection and evaluation of evidence. Well, there are two major areas in the accountancy profession. Is the recording of transactions, classifying those transactions, and summarizing that transactions in reports that are called financial statements, and making appropriate disclosures about those reports, that those financial statements. That is accounting profession. The auditing profession is to take all that has been prepared by accountants and establish as to whether the process that was followed and the manner in which the reports were written is in accordance with the criteria that was the accounting criteria, which is called the IFRS, Generally Accepted Accounting Principles. And in doing that, you must follow the generally accepted auditing standards to perform an audit that we are sure that if you are using this generally accepted auditing standards, you are going to put in a position that you would be able to investigate properly whether the accounts were prepared in accordance with the generally accepted accounting principles and IFRS. Are you understanding the difference? It's like having players in the field who are, we have a referee who is the auditor and the players in the field. The referee is trying to, who is the auditor, is trying to find out that the match is being played in according to the laws that were being used. The coach then teaches the players what are the rules and how to have a proper play in the field of Manchester United. Then the referee's job is to make sure that the proposed rules are being followed to the letter, and he keeps on blowing his wheels to see after. But for the referee to do that, he must adopt certain ways in which he must place himself in a position where he should be able to effectively review effectively supervise the play and establish whether the play went in accordance to the rules. So the referee has to go to the refereeing schools, to learn that how do you properly ref, so that when you finish with the match, you are in a position where to say the match was
You are muted.
Hello?
Yes, sir.
Yes, sir.
Oof, the internet went down. Anyway, let's try and see if we cannot get cover some stuff before it goes down again. Are you there?
Yes, sir.
Yes, sir.
Where did I stop? Where did you lose me? Where did you lose me? So the generally accepted auditing standards are generally the framework is made up of 5 things. These are the principles that underlie the whole auditing profession. Principle number 1. Let's have a common understanding of what is the purpose of an audit. We are not as opposed to an absolute assurance. The reason why we say reasonable assurance is because we have used samples and we are just giving third parties some reasonable assurance. The financial statements that are issued by management about the performance of the company are free of significant misstatements or errors or fraud. We are reasonably based on the evidence that we have taken from the millions of transactions that took place during our absence as external auditor, when there was only the management left in the building. We can give reasonable assurance to all those who were not the third parties that the financial statements as presented by management are free of significant or material misstatements. Material or significant, meaning they are free of errors that can, if omitted or included, would change the understanding of the financial statements. And that they are also free of fraud and any error. And as I say that, I confirm that I did a fair assessment and I hereby signed the report as saying they are free of, I give you a reasonable assurance. And the third party, the audit report and go and transact with it and make decisions based on this reasonable assurance that you have given. And that reasonable assurance will increase the user confidence in the financial information. Remember, this financial information or reports are part of the definition of accounting as the recording, classification, and summarizing. The word summarizing in the definition of accounting, it means the preparation of statements and the related reports as required by the generally accepted accounting principles or the international financial reporting standards. So the auditor's job is to say, yes, I can give you a reasonable assurance. Trust those reports because I'm giving you an assurance as an educated, competent, and experienced person that they were properly prepared and they give you they give a fair report of what happened in the last 12 months. Are you there?
Yes, sir.
By saying I'm giving reasonable assurance, the auditor, one would assume that the auditor would have used the generally accepted auditing standards. He would have followed the GAS process to put himself in a position where he sees he has collected enough evidence to be able to state a position that to be able to state this position that they're free of material misstatements. If someone says to you, who is an educated and experienced person, that I can put my head on the block, I'm reasonably assured that these financial statements are free of errors. If you are not a numbers person and you have to rely on those financial statements, definitely you will rely on those financial statements. Purpose. First principle is that purpose of an audit. The second principle is what are the responsibilities of management in the whole process. Management. As the auditor approaches the client, there should not be any confusion of roles. Who should do that, who should do that, and who should do this. The auditor's understanding and management's understanding is that there are two areas. The audit management's job, including management, I include the board, is to ensure that management have performed their job. Are you there?
Yes, sir.
The job of management is to prepare the financial statement. It's not the auditor's job to prepare the financial statement. That is in the GAS, General Accounting Accepted Auditing Principle. It is also in the Companies Act as a legal instrument that it is the job of a management to prepare accounts in English in accordance with the criteria that has been specified by BIC. And those criteria, we mean the IFRS and the generally accepted account. It's law that requires management to prepare the accounts. And these financial statements are in that definition of what an account. Hello? Hello?
Yes, sir, Rahul.
You are bewitching me today, eh? I thought I got cut off, isn't it? Am I there? Can you hear me?
Yes, I can hear you.
Okay. It keeps on telling me that you are cut off. Anyway, that's fine. Let's move on. Can you hear me though? So the financial statements include the notes to the accounts and disclosures. The disclosures, to the accounts, the disclosure requirements. It's management responsibility to ensure that there are systems and internal control processes that have been put in place to coordinate the movement of paper, authority, and control that things are not lost in between. Processes, these are internal control processes. Ensuring those internal controls are robust and are able to stop misstatements or errors in the financial. That's the role of the management. These roles that I've put here are part of the recording, classification, and the summarization of financial information. Are you there?
Yes, sir.
So we are not going to infringe. We are not going to audit. If the auditor cannot audit himself. So the auditor cannot prepare financial statements for the client, then audit them. Where do we get the independence now if the auditor has prepared the financial statements? In the past, you used to have this non-assurance services where the audit firm would have a department that prepares accounting and then takes the accounts to the auditing department. This has been made Deloitte's accounting Deloitte's accounting being audited by Deloitte's audit. Now it's not allowed. You cannot do this non-assurance services where you just do the services that you are not assuring, but there's a lazy accountant that could not prepare the financial statements. You do their bookkeeping and everything. Then you go to another department that prints that. It is highly discouraged to do that because it will be infringing the generally accepted auditing standard that it is an independent management that has to prepare financial statements. Personal responsibilities of the audit. Before you say you are an auditor, you must possess the necessary competence and skill to execute the audit. Especially that audit firms, unlike limited liability firms, audit firms have you have personal liability over everything. You will be sued in person. Your liabilities, because they are joint ventures, they are not limited liability establishments. You must have formal auditing and accounting education. That means if it's auditing and accounting, we call it what? Combined accountancy, isn't it? So if you have a degree in accountancy, you have a degree in auditing and accounting combined education. You must have anyone talking? Nothing. You must have a relevant practical experience. That is why during your studies of auditing and accounting, you are attached to a professional accountant like myself, or a certified public accountant like myself, that will drill you on the day-to-day processes of how to prepare, properly record, classify, and report on accounting, on financial information, and to come up with accounts that comply with what? With the set criteria, which is IFRS or the general accepted accounting principle. You must have what is called ongoing professional training, which they call CPD, continuous professional development. In accountancy, they call CPD, continuous professional development. Are you there?
Yes, sir.
So if you choose this profession, every year, every end of the year, I have to put not less than 40 hours of demonstrating that I have not been drinking the whole 12 months. I have been to school. And this is the training that I got in the last 12 months in the accountancy profession. This is called CPD, continuous professional. If you don't submit those hours, then your license for the year, because our licenses are renewed every year, so your membership will not be renewed because you have become stale. You don't remember the standards. So you have to do what is called. These three are underlying principles of the personal responsibility that the auditor must know. Auditors must be knowledgeable in the industry that they are auditing. They must make themselves knowledgeable in the industry that they are auditing. So you will find that generally in an audit firm, there will be auditors that are highly skilled in the retail sector. There will be auditors that are highly skilled in the manufacturing sector. There are auditors that are highly in the mining sector. You may have staff that are skilled in certain areas, and you may have in your portfolio of clients, you may be finding that the auditors tend to take on clients that are in a specialized industry, and lesser of clients that in a different industry, because he's more competent in industry. That reduces the risk of him making an omission and thinking that there's no misstatement or fraud. When there is, then he gets into trouble. Are you there, Muyapo? Are you there?
Yes,
Yes,
sir.
sir.
Then if you do not have the skills or the qualification to undertake an audit, that means you are not capable of collecting the evidence, evaluating it, and giving an opinion. Isn't that correct? If you lack the qualification and the professional expertise to undertake the audit, that means you cannot competently accumulate and evaluate evidence and put yourself in a position where you will be you are not able, you are not competent to accumulate evidence. 1, 2, you are not competent to evaluate that evidence, and you are not competent to express your opinion. So you must refuse any assignment to people calling you to come and audit them if you are not qualified or you have the relevant professional experience to be able to collect, to accumulate, and recommend and express. And that is your responsibility as an auditor. But we know you, because of greed, if you go into that space of greed, the auditor may decide that they want to take a client and express an opinion on an audit. Normally, they bend themselves in that direction, in that they will most likely make a mistake and express an opinion on financial statements that have material misstatements, and they will misguide people, and they will be sued. Not only be sued by users of the financial statements, and then they will be disqualified by the regulating authority, which is BAWA, for having made an omission. So for every audit that it is found that there were errors, and there's a fight ensues between the users of the financial statements and the auditor, the person who licenses the auditor, who is the Botswana Accountancy Oversight Authority, will be drawn to that attention. Then he will take the files that were used by the auditor to check whether the auditor did he use generally the international standards on auditing. How could the auditor have missed this evidence such that he is given an opinion that is not right? Are you hearing me? And if it is found that the auditor did not follow the international standards on audit or the general accepted auditing standards, the auditor will not be issued with a license which is renewable annually after paying a fee. Are you there? The auditor must be in compliance with the relevant ethical requirements. Are you there?
Yes, sir.
Yes, sir.
Have you done the course on
Yeah,
ethics?
Yes,
Yes,
sir.
sir.
Yes, sir.
And something on the ethics, the issues of a code of ethics for accountants, integrity, all those? Have you done something in that direction?
Yes,
Yes.
sir.
This is where we meet. The auditor is duty bound as an accountant to comply with the relevant ethical requirements. The code of ethics for the firm and for the auditor as an accountant. That, as I say, accounting sometimes can be a challenging profession. You are required to behave in such a manner that you maintain all the ethical the code of ethics of an accountant, so that you are independent, you have integrity, you have whatever. I mean, there are 5. You can know them better. You just pass the course, and you are seen to be independent. There is no independent in appearance and in fact. Integrity, you have due care, you have all those things that relevant ethical requirements. People are depending on you. You cannot be pretending that you know when you don't, because everything depends on the fact that you said you know. So you can't give us a case where you pretend that you know and you found not to be knowing. You owe us a duty of care under common law and in terms of the Companies Act, that when you have presented yourself as a knowledgeable person, it is your job to ensure that we do not get hurt by you giving an opinion that is not properly researched, because we depend on you, because we are just people who don't know anything. If you take that posture that I can be dependent on, you must live to that word, because we are going to depend on you. And if we get hurt in the process, we are going to sue you, and the accountancy profession, even the regulatory environment, we are going to disqualify you from being an auditor or an accountant, because you gave a wrong posture. The accountancy profession is very jealous of that, because it was during the famous 2001 2002 corporate scandals, Savo Enron, that the accountancy profession was really put on the spotlight, because we had firms collapsing. Density auditor on a daily basis, they were collapsing, and the auditors will just go scot-free. We had auditors conniving or whatever reason with executive management, allowing executive management. Are you there? I'm speaking too fast.
Yes, sir.
What? I'm speaking too fast or what? Or you are just complaining? We had firms that are collapsing in front of auditors. The auditor having finished an audit yesterday, and tomorrow expressing a clean opinion, and tomorrow the firm collapses, and that was a serious embarrassment to the accountancy profession. That is why immediately after the early 2000s, we had a strings of corporate governance processes, Booking 1, 2, 3, the Oxley Act, Yago America, the Corporate Governance Code in the UK, all kinds of things, and revising the standards, auditing, accounting, to try and close the loopholes that people plundered the whole system, because of accountants included and auditors as part of the whole thing. Now the rules are very strict. Personal responsibilities of an auditor. Professional skepticism. You must consistently exercise professional, be a skeptic. When you must check petty cash every day. Checking petty cash does not mean that you are saying the person who is handling the petty cash is a thief. wrongly interpreted in Africa. If I say, okay, you are the treasurer of, we are 3 of us, you are supposed to be the treasurer, we gave you 100 pool. You went to buy bread at the, we are 3 of us, we are hungry, we contribute money. You go to the cafeteria and buy bread. You come back with from the cafeteria, you have bought bread, and we say, can you produce the slip, the invoice, the slip, and also can you put, let's count the change, the 3 of us. Are we saying you are a thief? In Africa, it
No,
will.
sir.
But is that how is it handled in our culture if you say that? They'll say that means you don't trust me, eh? Isn't it?
It is, sir.
Can you ask your friend to bring the change and the receipt after buying bread and and you are even shy to ask for the friend to bring the receipt so that you check what was the price and let's count the receipt. Let's count the change. That means you don't trust me. Professional skepticism is be always on the lookout. You are not saying people are wrong. You always come from a position of be skeptical that things have been done properly, and go an extra mile and investigate. Ladies and gentlemen, these are the personal responsibilities as we try to explain the personal responsibilities of an auditor. We'll stop here for today and try to find, we will see. You must be on the lookout. There's a possibility that I may not be in on Wednesday and Friday. I'll send some, I need to go somewhere. I'll send some message in the online if I'm going. But otherwise, I take it we are going according to plan.
Sir.
Yes, sir.
Since there are senior auditors and junior auditors, if the junior auditors make a mistake, are they only gonna be sued in accordance, or are they gonna be sued both with the senior auditors?
There's only one person who expresses an opinion. That is the partner, the senior audit. The rest are working on behalf of the senior audit. You got it?
Yes, sir. Thank you. All right. Yeah, makes sense.
It's like the secretary making a mistake. You can't go to the secretary. You should have checked whether the intern has made the proper checkings. Eh? So the person he writes his name, that I am the one saying I'm expressing an opinion. Whoever did under him, whether he sent A, B, C, D, it's for him even to check whether the people that he's sending to check on his behalf, because he's only have 2 hands. The auditor wants 20 hands. He uses only 2 and he multiplies with his hands with competent interns like yourselves and other people to go and check the figures. It's him who takes the final 4. Are we together? Sure. Yes, we meet on Wednesday. Thank you very much.
When is test?
Thank you, sir.
When is the test?
Sir, may we have those slides?
Not now. Let's go deeper a little bit. You'll have them next year. Next week. I'm still correcting them as we go.
Oh, okay. So when is the test one?
I don't know. Do you think we should be talking about it? Is it not too early?
Yes.
Go early, sir. Go early.
Yeah. Let's try and plow into this course outline. Then we can take a view and look back and say, I think we are at a point where we can start asking ourselves questions about whether we heard what I said or not. Thank you. Good day.
Bye. Good day.
Bye-bye.